Good morning, good afternoon, good evening, no matter where you are in the world. This is Howie, and I'm here to help you win with money. This is a series that a lot of you have been asking for. I've been talking about how to level up your thinking to move from basic or beginner's level into more intermediate or advanced. But I think there's a lot of confusion in the market on what that means, and this video will clear it all up. I'm going to talk about how you level up your knowledge in the stock market. And there's different tiers, so I want you to start thinking about that as we continue this video. So think about children's blocks. I have this visual here, and you can see the blocks. And a lot of us have seen these kid blocks where you stack them up. So let's start. What is level 100? A very basic course. According to some studies, they think 40% of the US population don't have any stock interest or very little, non significant. Here is a Forbes magazine article written in 2008 of August, and you can see this. Most Americans don't have real stake in the stock market. They go on to talk about this, and it gives you a number here. Roughly 55% of Americans own some stocks. And they go on to talk about, well, what's the difference? The peak is 67% in 2002. And then obviously there was some recession and people got out of it. There was the dot-com bust and people struggled and lost a lot of money. And that's what this talks about. The part that's interesting to me is this piece here. It says relatively small share of American families directly invest in individual stocks, 14%. And then they give this other number. The majority have some market investment, mostly through 401k plans. So this is really interesting because what that tells you is this may be a true statement. 52% or roughly half invest through a 401k plan. But that means very few people own a brokerage account, which is outside of your 401k plan. Now, the numbers may have changed recently. Webull, Robinhood, M1 Finance, and some other mobile phone brokerage companies probably changed that. And I'm sure those numbers will be much higher the next time they do these surveys. So, what is the next level? When you think of stock market, what's the next easiest thing for people to do? I believe the next level, a level 101 thinking, or your college level course 101, should be something as simple as using a low cost index fund. There are many ETFs that cost very little. Thank you, Vanguard. They have changed the industry. You can buy stuff like the SPY or the VTI or the Vanguard Total Market. That has really leveled the playing field. It made it easy for you to understand the stock market. You don't have to know which mutual fund is going to perform well. 20 years ago, you had to decide, do you want the Fidelity Magellan Fund or the Contra Fund, or should you invest in the whatever the other funds were? I mean, there were 5,000 different funds. You had to know which one was going to perform well. And it was really hard because it was up to the manager to pick which company belonged in that fund. So what's the next level? What is after the index fund? I added this other part here where the goal of level 102 is to try to beat the market. And there are many ways to do that. Some people like to use the QQQs or some type of other index that has a little bit higher risk. The semiconductors, SMH, or all those new followers will understand what the ARK is. Historically, some people try to build their own portfolio to try to beat the market. Many people in the DGI or dividend movement, that's what they believe in. If you follow high growth, or some people who only invest in EVs or cannabis, they believe they can outperform by buying future high growth companies that will outperform the market. And that's the goal. So in level 102 does require a little bit of extra skill to do this. So the goal here is to make up some extra risk, and that will outperform or hopefully help you outperform. And what is the last level? And here is one of my favorite topics. The last level I put here is either day trading or options trading. And normally what you want to do is you layer that on top of another strategy. Now this is where it gets really complex. Options trading has a really bad rep, and I agree. I know why. It's not for everybody. A lot of people lose money, and some people think it's rigged or you can't make money. But there are many good purposes of using options. For some of us who trade, we understand there's ways to make income. You can do cover calls. You can do the wheel strategy. There are different strategies that you can use in option in conjunction with the other strategies will help you. The other way is to hedging your bets. Some people, if you own stocks like an Amazon or a Tesla, and if it run up, let's say 50 times your money, there are ways to protect your gain by using protective puts. Again, is that for everybody? Absolutely not. So let me explain what this means now that you have different levels. I like to look at it from this standpoint. Those who don't invest will earn zero. In fact, earning zero is really bad. Inflation generally averages around 1.7, or let's call it 2% a year. Every year that your cash earns zero, you're actually losing 2% because the inflation rate is about 2%. If you invest in an index fund, most people have access to that through their 401k plan. The average return is roughly 10%, safe to say. Some people like to use 8 or 9%. Some people call it 11. Regardless what the number is, most experts said it's okay to call it 8, 9, or 10. Those who add extra risk in level 102, you don't always beat the market. Sometimes you got a really bad strategy. You may underperform. Those who are using QQQs or even ARK, you could outperform the market. Now, ARK is kind of young. We don't know whether or not that's going to outperform over the next 5 or 10 or 20 years. So the story on that is not finished being told. Delete that. Delete that. In level 102, by adding extra risk, we don't know will you beat the market. Some of you will beat the market if you use QQQs. Some of you may underperform. But that's the risk of using your own strategy. Some people who added ARK outperform the market. But ARK is such a new fund. We don't know what's going to happen in the next 5 or 10 years, whether they will continue to outperform. And the last thing I like to talk about here is this level 102 one. Same thing here. I list this as a positive, negative, plus 5 or 15%. It ranges. If you don't know what you're doing, it's actually going to become a drag on your portfolio. You're actually going to lose money using this strategy. But if you're good enough and you know how to make profit using options, it can add anywhere between 5 to 15% on top of your really boring 101 strategy. And so that's the way this picture works now. I'm going to give you a visual on the next slide of why we do it this way. Those who do nothing is everybody. Everybody can do that. That's the skill level. But what's the skill level required to do this? Anyone can index. Most people can go and buy an index fund and cost you very little. You don't need to pay for an expert. You don't need to pay 1% advisor fees or financial advisor fees. See, 20, 30, 40 years ago, everybody felt like if you didn't know how to invest, you have to pay somebody to do it for you. Not anymore. Anyone can buy an index fund in an S&P 500, hold it for 20 or 30 years, and you will do fine. Adding risk is not so easy. At the next level, the 102 level, I think the skill is about an intermediate. And I don't think everybody who does this will actually do well. I put that percentage at about a 35%. I really do think it's less than half the people who use this particular method will not do so well. They may actually underperform. A small segment, maybe 30% or 35%, may do a little bit better. And the last piece is the level 102. This is the one that's the most hardest. It's an advanced level. And I think the rate of success is even smaller. It's 20% of people may do this well, which means 80% of people who try this will actually not do well doing this. And this is why it's important. When you go back to the percentage, if you're going to underperform, it becomes a drag on your portfolio. And if that's the case, you're probably just sticking to the 101 strategy. The 101 strategy is the foundation here. And this is why I did this slide in this fashion. If you build your portfolio using a 101, it's down here. And if you're ready to move up to the next one, you don't get rid of this portfolio. You don't sell everything and then say, hey, I'm going to add extra high risk. So what this means is if you build a portfolio using this method, you have your boring portfolio that's going to always do a market average rate of return. You may add some high risk in here. Maybe you're buying cannabis. Maybe you're buying EVs. Maybe you're buying SPACs. Maybe you're buying the next space travel company in here. Will those outperform? We don't know. And in the same way, if you're moving up to this tier, the level 201, it becomes harder. It's not for everybody. That means when you move up here, it doesn't mean you get rid of these strategies. You're layering all your strategies together. Hopefully that makes sense. Now, I'd like to give you a quick overview of what I do. So I have a really boring portfolio, mostly S&P or some mid caps, and that's here. Those are all done for your 401k plan. What I then do is at this level, I have a whole bunch of dividend stocks. What I've been doing is I've been selling some stocks and buying 100 shares of dividend stock. And there's a reason for that. So at this level, I'm trying to add companies that I like that will outperform. But by buying 100 shares, I can layer another strategy on top, which is the option trading strategy. So I have this here. Some of this will add dividends to my boring portfolio. And then at the level 201, I'm using options on the shares that I hold here to add some extra income. If you own 100 shares, you can do a cover call. With cover calls, you can make $10 or $15 every week. Not a hard strategy to do. Then on top of that, I use I do other trading strategies at the level 201. I like doing credit spreads. I like doing some protective stuff if I need to. So I do other strategies to collect more income. And when you combine them all, that's where the power of this works. On a down market, the level 101 may go down 10%. In fact, even your level 102 may go down 10%. But what I love about options is if you play it right, options can still make you money in up markets, down markets, or relatively flat markets. And the way I play it is I like to shoot for a nice 8 or 9 or 12% rate of return using options. And when you do that and combine it with a down market on this portfolio at the 101 level, your index, what that means is this is no longer a drag to your portfolio. It's actually going to boost the returns with my goal of making just a little bit more each year. And on up years like last year, when the market returned roughly 15% at the 101 level, which is the index fund, by trading options on top of that, I added another 8 or 9% return on top of the returns that I made. So when you combine that all together, That's where the power of a strategy like this comes in. Now that I explain it, I hope you guys understand why I do what I do. In investing, this is not a binary choice. It's not an either or. You don't have to pick one strategy or the other strategy. And this is why I think the market has really poor misconceptions. When they say you're a trader or when you do this particular strategy or that strategy, people just assume that's the only strategy you do. And I think that's a really poor assumption. In fact, if you're doing proper risk management, it's only wise to keep about 90% of your strategy or 80% of your strategy using this really boring tactic down here, the level 101 strategy. Your core portfolio should follow this. Then what you do is you take a little bit of risk. Maybe 5, maybe 10, maybe 15% of your portfolio, you can do something like this. And then on top of that, this becomes the smallest percentage of your portfolio. It's the highest risk. And if you don't know what you're doing, obviously you don't want to be betting your whole portfolio. You want to trade small, do small bets, and make sure you understand how to use all three of these components together. With that being said, this is how you can reduce risk in the stock market. You can make money when the market goes up. All of these can make money when the market goes up. When the market goes down, 1 and 2 may go down. But hopefully, if you're doing it right, your option trading strategy will make a little bit of money. And that helps. That's no different from how I use dividend in step 2 to buy more shares when the markets are down. With that being said, if you have any questions, don't be afraid to comment below. I would love to answer any of your questions on the philosophy of how I structure and why I structure all these strategies on top of each other. I don't want to teach you that level 101 is bad. If that's all you do, and that's the only thing you do, you should do well if you started early. If you started in your 40s and 50s, you may have to save a lot more to catch up. For those of you who want to sort of speed up the process, or you really enjoy stock picking, that's where adding extra risk can add extra return. And what I like to do is this advanced level stuff. It's the options trading, because what that does is it creates an environment where if the markets go up, I love it. If the markets go down, I can still handle it because I'm still making a little bit of income using the options. And sometimes that's not a lot, but it's enough to keep on increasing the portfolio. And there are times where you can deploy your extra cash to buy stock when they're on a discounted price. With that being said, I think I'm done. Don't forget, you can find me on Facebook. If you can look for me here. I run a Facebook group called Investing 102, where you can level up. So this is Howie, and I'm here to help you win with money. As always, let's do this together. Let's do this $1 at a time, and have a profitable day. Bye-bye.